I see two economies. I see the economy of the wealthy people and the asset holders who have benefited from essentially more than 40 years bull market in asset prices, with stocks, bonds going up, real estate going up, everything going up after 1980, 82. When stocks and bonds bottomed out, and we had this period of disinflation and the opening of China and the breakdown of the communist ideology around the world, which lifted the standards of living of, say, 3 billion people. And then we have the economy of ordinary people in the Western world, whose standards of living, by and large, has gone down. As I said, I distinguish between the economy of the very wealthy people, the 0.1% or 0.01% that benefit from asset inflation, and then the economy of non-asset holders, the workers, whose benefit is much less or negligent or non-existent when asset prices go up, because they don't have any assets, but they have debts. And these standards of living have been hurt, particularly after the bottoming out of interest rates in year 2020, when the 10 years US Treasury was at less than 0.6%. From there on, interest rates went up, and the young generation and many people who had borrowed money in the belief that interest rates would never go up, they got hurt very badly when interest rates went on their, say, mortgages from 2% to 6% or 5%. So this is what I'm seeing. I think in the Western world, we have an institutionalized poverty. In other words, the government can hand out money to people, which they do. You know, we've moved very far to the left in Western society, and we subsidize a lot of people. We subsidize them through unemployment benefits, through long-term care and social security and allowances for this and allowances for that and so forth. But what it leads to is essentially these people earning a bit more or having a bit more money. Then they go to Walmart and they spend it, and then the money is earned by the capitalists who own Walmart. And the ordinary people are still struggling. And now they have this brilliant idea to impose tariffs. It's an absurd idea because the tariffs will increase the prices of just about everything. And the employment gains will be very minimal because companies will pay the tariffs rather than move production in the US, where there is not sufficient technological skills, nor are there enough people to do the jobs that, say, the Chinese or the Indians or the Vietnamese do. It's difficult to tell to what extent someone, whether it's Trump or someone else, can break the deep state. Until 1910, the governments in Western countries were around maximum 10% of GDP. There was one or two countries that were at 12% of GDP. But government as a percent of the economy was small, and therefore the economies at the end of the 19th century in America and in Germany were growing very rapidly because there were no regulation, nothing kept growth down. But then in the 20th century, the bureaucracy has expanded and tried to open a restaurant in New York nowadays, or in Zurich or Munich or in Milan is very difficult because you have so many bureaucrats that never worked in a restaurant that come and tell you how to essentially install the equipment in the restaurant for hygiene and healthcare and fire and whatever. And that contributes to inflation, that prices go up, and it retards economic growth. Maybe these restaurants are safer. I was last night in a place in Shanghai, which is very unusual. It's a boxing stadium, and normally boxing stadiums, they have a gallery around the boxing ring for the spectator. But in Shanghai, the peculiarity of this boxing stadium is that it's surrounded by bars with girls and pool tables and heavy drinking. It stays open the whole night, and the hygienic conditions are not the best, but it's a lot of fun, and everybody's happy and enjoying. In the eyes of economists and of social observers, Thailand is a failed state, but Thailand is one of the highest recipients of tourists around the world. As a percent of the economy, tourism is very important in Thailand, and the retirees that come here, they flock here because it's perceived to be a very friendly friendly and free country for retirees and very safe. And I'm mentioning this because the perception, some people say, it's a failed state, and yet it attracts so many foreigners to come to this failed state. Maybe Western Europe and the US should be more failed state-like in order for their citizens to be more optimistic, because consumer confidence in both Europe and in the US among people is not very high. This is an issue that preoccupies my mind. Will we move more to the left before we move to the right, or are we moving now to the right? And to what extent can we move to the right? Because, once you have social security, once you have benefits, unemployment benefits, and everything is taken care of by the government, basically. How can you dismantle that safety net? Because most people prefer safety to freedom. They will lean towards the view that they rather have, or they don't consider freedom to be very important. They perceive to be fed. In other words, have enough food to eat and a small car to go around with, and so forth. With that, they're reasonably happy. They don't want to be risk takers like the capitalist that drove economic growth. He opened a shop, or he went and was a pioneer, and he developed land in America and worked on the land. These were occupations with very high risks: sickness, poor crops, droughts, floods, everything. You have to admire these Americans who went to the wilderness and developed the country. Also the Canadians, the trappers that went through the Canadian mountains. The hardship these people endured is unbelievable. Nowadays people come to America because they get benefits. They don't want to take risks. That is the difference between people that moved in the 19th century to America. They arrived in America, they had nothing. Maybe they knew some relatives, or maybe there was a church organization that supported them a little bit. But by and large, they arrived in America, and unless they worked, they faded away. Nowadays, people arrive in America, they don't want to work. Same in Switzerland, same in Germany. Immigrants that come, lots of them, they don't want to work. They're above work. Affordability of home buyers at the present time is at the lowest in history. You can measure how affordability by comparing the price of a house to your income, or to the typical income in America, or the average income, or the median income, and so forth. And you can also measure the standards of people according to consumer confidence, and you can also measure it according to essentially how many people are free. I consider someone not to be free that needs to collect his paycheck at the end of the month to pay his bills. He's a slave. He collects his salary and right away has to pay the interest on the existing debts he's got, and the expenditures for his house or for his apartment or for his car, whatever. And that ratio of people who live paycheck to paycheck is now at the highest level in the history in America. And so when American economists come and tell me how the great consumer, or the consumer is in such a great shape, this is all nonsense. The asset holders are in a great shape, including myself. I'm also an asset holder. I benefit from money printing, but I'm also an economist and a social observer, and as such, I must condemn money printing. It's a very evil way to impoverish the majority of a population. But the economists in Wall Street, they all paid, and they're all also bribing the Fed and are consultants to the Fed. So you will never hear this criticism by Wall Street economists. Wall Street economists, they want to understate the rate of inflation so they can keep on printing money. With money printing, the asset values of portfolios and of all kinds of assets go up, and the fees that Wall Street collects from all these assets goes up as well. So Wall Street and the Fed are in a symbiotic relationship that benefit both. And the government as well, because the government can issue bonds at artificially low interest rates. But the public will never be informed about this because the media keeps quiet. I was in interviews in New York with all the major media outlets. I told the journalists when they told me, oh, the rate of inflation is 1-2% and so forth. I said, I want to ask you, by how much is your cost of living going up every year in New York? They all were silent. They didn't dare to tell me that their cost of living was going up at something like 10% per annum. I grew up in the 1950s, and I would say in the 50s we had a relatively healthy capitalism, but not perfect. There were also restrictions on trade and patents and so forth. But the problem is market-oriented economies, such as Milton Friedman was, no longer exist. All the economies, one way or the other, are interventionists. They say this should be done, the government should do that, and so forth and so on. I'm, of course, against any intervention. And not intervention also means that you have a capitalistic system. And I want to reiterate what I said for a long time and repeatedly. Capitalism involves pain. There are lots of people that go bankrupt in capitalism. And in capitalism, you have recessions. Once you have a government that doesn't want to accept recessions, and each time the economy slows down, increases government spending and prints money, you avoid near-term pain, but you produce much more pain in the long run. And traditionally, during recessions, unemployment went up, and then wages went down, and then unemployment picked up again. But now what happens is that nominally wages do not go down, but because of the money printing, the prices go up more than the wages. And so in real terms, inflation adjusted, the standards of living of people is going down. Anyway, I mean, if someone is interested about really capitalism and what society looks like in a capitalistic system, it's a very good book, Capitalism, Socialism and Democracy by Schumpeter. That I recommend to everyone. And it also explains why capitalism leads to socialism, partly because of the jealousy and the envy of the academics at universities, because they hate to see someone who has no education and makes a lot of money, whereas they consider themselves to be the elite. Intellectually, they make nothing. So anyway, I think the investment markets are uninteresting and interesting. Uninteresting because some markets are overvalued, in the FANG stocks, the Magnificent Seven and so forth. And by definition, if something is overvalued, by definition, something is undervalued. So you have to go and buy the undervalued assets, but the undervalued assets are neglected, and that's why they're cheap, but they don't move. And so they stay cheap for a while until they move. They suddenly will move. And so I'm looking at these undervalued assets around the world. I think the risk of a crash is much, much higher than what the public perceives. And I just like to say this, at the present time, we have statistics about this. People are gambling in options like there is no tomorrow. They're buying stocks like there is no tomorrow. In consumer confidence figures, one of the indices is the expectations of stock prices in 12 months. It's at the highest level ever. And while the public is buying in its complacency and in the absence of considering the risks, given the high valuations, one of the, say, more successful investors over the last 50, 100 years, Warren Buffett, has increased his cash position. Now you have to think this philosophically. The public is piling in, and a proven smart or intelligent investor, well, with lots of knowledge because of the good contacts he has with the government and so forth, he is selling. So the masses are buying and the smart man is selling. Tells you something about the market position. Now some young people will say, Warren is senile. Yes, possible. I mean, I just wrote a report, the Trump top. I think the stock market is going to peak out very soon. Lots of stocks have already topped out. They will not go higher. And some stocks like energy, they are relatively cheap. Mining stocks are cheap, and there are assets that are not terribly expensive. There are European stocks that are not terribly expensive.